Alright, so this is the third part of SA 501, and it is going to be concerned about segment information. So first of all, we need to know what segment means. See, there's some set of entities which are required to divide their whole entity in a kind of way, or the financial statements into segments. That is, in this particular way. These are some. It is required to disclose something. This is according to Accounting Standard 17. Strictly according to Accounting Standard 17, it says that particular entities are there which needs to be divided into segments. Like if you take the example of Apple, what we can do, we can divide Apple into 3 or 4 segments, right? So what are those segments? Maybe we can have a MacBook as one of its segments. And then we can have an Apple Watch. We can have an iPhone. We can have iPad. We can have maybe iPad, iPod, etc. So these are some segments of the entity which are being divided on the basis of products. On the other way, these can also be divided on the basis of geographical areas, like um, if you talk about very major giants which do not deal in many products, like Infosys, they deals in softwares. So Infosys may be for India, for US, for UK, and etc. So they can be divided on their segments are going to be divided on the geographical areas. So these entities are required to disclose there are 7 set of things which are required to be disclosed as per AS17. AS17 is a part of CA final curriculum. So they are required to required to disclose 7 things, out of which I can tell a few, like sales revenue is the first one, how much sales you give, and then there is a depreciation also. Then you have costs incurred, etc. So these are some things which need to be disclosed separately, and these are reported entities which are reported separately, and those which are not reported separately are going to be called as others. That is, they're going to be other, I mean, these 4 are separate, and rest of the business is going to be called as others, right? So this is a basic introduction about what segments are. So these are segments as per AS17. So first of all, segment information, it means the information to be disclosed in respect of reportable segments. So these are your segment information. You need to disclose these things, so these are known as segment information. Then, so it means the information to be disclosed in respect of reportable segments, or as given in AS17, reporting segment issued by ICAI. Audit procedures regarding segment information, they consist of 2 audit procedures: analytical procedures as per SA 520. You perform analytical procedures, and other audit tests appropriate in the circumstances. You have to perform, I mean, if you're examining these, the auditor is examining a particular entity which has been divided into segments, you can go for analytical procedures by comparing 2 different accounting periods, different sales results of one period with the other, or sales results of different segments, etc. So you compare things, maybe the financial and non-financial data. Then the auditor would discuss with the management. This is management. The auditor would discuss with the management the method used in determining segment information, how it is determining the segment information, which method the management is using, because it's as per AS17, it would be having some methods, and which method has been adopted by the management. The auditor is going to ask from them, and consider whether such methods are likely to result in disclosures in accordance with applicable FRF, the Financial Reporting Framework. FRF means Financial Reporting Framework. The auditor will ask that whichever method you are adopting, whether the use of such method will lead to your financial statements being prepared as per applicable financial reporting framework. That is, if you are adopting this particular method, does that mean that you are following these financial reporting framework? Does that mean that you are in accordance with financial reporting framework? Because first of all, he's going to discuss about the method they are using, and then the impact and on the applicability of the financial reporting framework. So he is going to consider whether such methods are likely to result in disclosures in accordance with applicable financial reporting framework, and tests the application of such method. The auditor shall also test the application of such methods as well. Then the auditors would consider these things. I mean, these are in practical. I mean, if you have done with accounting standard 17, you would have done these kind of things as well. Sales transfer and changes between segments. That is, see, it always happen between two different entities. What happens is that um, they make inter sales. Apple Watch sells some kind of things to MacBook, or if we do not take these things, if we take geographical areas like India, US, China. If Infosys is having its segments over here, the major segments, and then others, if Infosys is having these three segments, there would be definitely, and I'm 100% sure that there would be some kind of transfers from US to India, from India to China, from China to US, from US to China. There would be some transfers, so they need to be taken care of. So sales transfer and changes between charges between segments, elimination of intersegment amounts. These intersegment amounts needs to be eliminated to compute the total sales of the entity. Then comparison with budgets and other expected results. Example, operating profit as a percentage of sales. Allocation of assets and costs among segments. You might be having costs which are aggregate for the whole company. You have to divide it for the different segments. So the auditor would consider how they have been divided, how the assets have been allocated, etc. Now the management representation. Management representation is a written representation that you ask from the management. That is, the management gives it to you in writing. It writes down what the auditor is asking for. So the auditor should obtain a written representation. That is, the management is going to give in writing to the auditor from the management concerning these things, right? Written representation is going to be concerned about these three things. The management has to give it in writing regarding these three things. The first thing which the management has to give in writing is completeness of information regarding segments and disclosures thereof. That is, the information regarding segment is complete, and the disclosures that was required were also complete. These 7 disclosures: cost, depreciation, sales, revenue, etc., are going to be disclosed, and the management is going to give it in writing that we have disclosed everything. Then appropriateness of the selected segments, based on risk and returns, that you have divided the segments, they are appropriate. The management is again going to give it in writing. Then organizational structure of an enterprise, it is going to decide, I mean, give it in writing, the organizational structure of the enterprise and its financial reporting system, what financial reporting system it is having. I mean, and if there's any deviation from this particular system, if there's any deviation between the internal financial reporting system, in that case you also have to give it in writing what kind of deviations were there. So this sums up my video on SA501. This was the third part that was segment information. Hope you liked my video. You may subscribe my channel as well. Thank you so much for joining me.